Yeah. Yeah, the reggae's back. Sunday reggae. Such a vibe. Even though it is generic. How's everyone doing? How's everyone's weekend going? We good? How is it Sunday already, huh? So this is basically what I do. I do this every week myself anyway, so I thought I'd just hop on and spend a little time with you guys. Just go through the previous week. And if you've got any questions, feel free to ask. Feel free to ask. So has anybody got any trades that they took a losing trade on that they want to go through from last week? And how it, oh shit. It's the end of my Mac. Any trades from last week that they want to go through? Maybe they took a losing trade, maybe they took a winning trade. Who knows? If you do, just feel free to drop it in the comments. Just say the time where you entered and go from there. But for me personally, I was absolutely bang on in terms of bias just for all of last week. Absolutely bang on in terms of bias last week. So if you were keeping up to date with the daily plans, it was an absolute phenomenal week as we work our way back up to 20,000, right? Which is what has been our drawn liquidity all week. So we can start off there if you want and work our way through the week. So how I know that price is going back to 20,000, simply using the principles of X levels. And then we can start going from Monday and start going through it. Can you guys hear me all right, by the way? So, anyone can just give me a little rain check in the chat. You hear me all right? Sometimes YouTube's a bit funky. Anybody in the chat can just say yes, you can hear me, or are you just listening to, you just staring at me in the screen? Yeah, good stuff. Cheers, AP. Okay. So purely on the principles of X levels alone is how I was anticipating price to go back to 20,000. Okay, and for that you have to rewind a little bit to know what's happened before in order to know what's going to happen moving forward, right? Just purely using the principles of X levels. So if we rewind this little pappy and we go all the way back to it, this was the X levels at the time, right? So this is our weekly dealing range from this high to this low, and our monthly dealing range was from this high to this low. So we were just operating between a premium on the monthly and a discount on the monthly is what took place previously. But if price goes out of 38%, it's a sign of immense weakness, ladies and gents. It's a sign of immense weakness as price moves down to its objectives. So what we're going to do is when price rejects 38, we're going to wait for price to pull back up into what is in this instance the premium side of this bearish weekly dealing range, and we're going to short there on this instance on the daily. So on the weekly, we're going to be rejecting 38, and then we're going to be looking at the premium side for the daily candles to come back to, which is where you would go short, which is 21 and 29.5%, which is highlighted in this blue box. Now this becomes relevant when price comes back to it at a later date. So at this stage, when you were trading here back in late March, it's bearish to come and drive out the lows with the principle that price is incredibly heavy as it's rejecting 38, which is the deep premium side of the weekly dealing range using the principles of X levels, right? So this is a premium, and the green up here is a discount in terms of this bearish dealing range, right? Because we broke structure, this is a bearish dealing range. So what you should be looking for is for this to violate the low and then come back up to 21 and 29.5. Sorry, 21 and 12, I'll take that back. 21 and 12, right in here, all right, on this weekly dealing range, okay, which is the discount side. So if I just play this forward, I actually have to move this forward, I think. So if I go to let's just get rid of it, and we rewind to here. All right, you can see that price comes back to 21 and 12% on the premium side of this weekly DR as it is extending downwards, right? So what it's doing is it's dipping down into its objective. Now the objective at this point was a divergence on the NASDAQ. Okay, so that's your difference between your NDX, the Qs, and the futures contract. So there was a NASDAQ divergence which it came back down to and tagged, at which point we now know that this becomes our doll. This will become the doll for price to revisit. Okay, and you can utilize this on other time frames, by the way, which is what I teach inside Red Pill, which you guys will be familiar if you are Red Pillars. But this will become a doll for price to revisit. So when price rejected 21 and 12, price will revisit here. It will revisit. So all you're looking for price to do is fulfill its objectives on its low. Okay, so price is heavy as it reaches its objective. Once it's fulfilled its objective, that then becomes the doll. Okay, so as soon as we tagged the NASDAQ divergence on the low, my objective is now to drive price back up to 20,000. Okay, now there's other supporting contents we could have utilized for this. Just on a macro point with news, what have you, but I'm not going to go through all that today. But what we now have is another new bearish weekly dealing range, and we have what is the deep premium, and we would have a discount side, and that is the same with this daily dealing range. Okay, so this daily dealing range high, we now know price is going to come and revisit that high, and we also know it's the liquidity above the daily dealing range. Okay, so in the principles of X levels, we're going to be seeking liquidity above dealing range highs, whether that's the 1 minute, 5 minute, 15 minute, hourly, daily, weekly, monthly, you have it. Okay, so if we are bullish taking price up here, we want to be shorting out of what is a premium on the weekly to revert price higher. Okay, to come and draw out this high. This is the doll for 20,000. So all of last week coming outside of premium to drive price up to our doll, our weekly objective, which we just failed short. I imagine it's going to go and finish that off next week, early next week, to come and take out 20,000. All right, so that is the higher time frame objective. That's the smaller little piece of analysis that I did in order to set up my week. Okay, so we can start working our way backwards. What I'm going to do is start here. This is the most important. Okay, so what we have here is an RTH gap. And if you remember on this specific day, this is where I was looking to go long. Okay, and on the left hand side over here is where I have the hourly chart. And then this is my 15 to 1. These are 1 minute charts. And then this is my daily, weekly, monthly. So if we look all the way down here, this is the use of an RTH gap with a breaker block inside it. So I teach this inside of Red Pill Uni, but what I'm always looking for when I'm using the RTH is two things. So I'm either looking for the RTH gap, and if I am bullish, I'm looking for 50% and 25%, so the upper range of that RTH gap to be respected for higher prices if I'm using an RTH gap. Now, for me to frame an entry inside of that, it has to be either a mitigation block or a breaker block to support price, because as we know with the PDRA matrix, it has to go through that in order to run lower. So if it's going to crack through that, it's more likely to go and work down towards filling the RTH gap or even pile through that to deeper objectives, right? But if I have a breaker block and a mitigation block inside of the upper 50% of an RTH gap and I am macro bullish, that is an area to go long. Okay, it's an area to go long. So inside of here on this day, we had an RTH gap. Okay, so what I do is I flip to the RTH chart, which if you're on TradingView, it's down the bottom right. And I measure out my RTH gap, okay, which is from the closing price of this candle to the opening price of this candle. All right, and I'm going to measure out, let me just get rid of these for a minute. I'm going to measure out that RTH range. Now what I'm always looking for, as I've just mentioned, is upper 50% and 25% to be respected for higher prices with the support of a breaker block or a mitigation block. Okay, so if we now look over on this hourly chart on the left hand side, we have this breaker block. Okay, so if we look on our daily chart, this low, high, lower low, break through. This highest up close candle on the hourly is our breaker block inside of that RTH gap. All right, so inside of 50% and 20 and the upper 25% is where I'm looking to frame entries long. And funny enough, 50% is where I'm now dialing in my entries. Okay, this is where I'd start to be looking for my entries long. Right, we can also use things like standard deviations to start dialing in that entry further, and also going even further into our models, right? So an H1 to M5 model down on this low. Okay, so that is the higher time frame analysis and bias done on that specific trade. Then it's a case of just dialing in your entry, right? So if we go all the way back to here, if you were trading during London, right, what do we have here in terms of a model? So if you're trading during London, what do you have here in terms of a model? What kind of model do I have? So we know that we've got a high time frame context to support. We know we've got the breaker block inside of the upper 25% in this instance of this RTH gap, which price dips into. But we have a mechanical TS, right? It says higher time frame sweep. So all we can do is just measure out our 5, which is this high to this low, and we're going to be seeking 2x. Okay, so for everything en route, I'm simply seeking 2x, which is up here on our 5-minute chart. So anything in here, we can start now utilizing the principles of bog standard price as we work our way up to our objective using the MAC TS. Our final is 4x, which is up here. Okay, so inside of here, we've now got our sweep on the hourly. All right, sets up our high probability lower time frame breaker block. So anywhere inside of here is where we can start dialing in our entries for bulls, right? For higher prices as we work up to our objective. All right, there's other things we can overlay on top of this. For example, we hop onto our, let's have a look. What do we have here on the 15-minute? So we have our 3 OBs, right? So we're always going to be looking to long the middle fair value gap. So there's so much you can utilize in terms of supporting confluence for higher prices, right? But just keeping it highbrow for now. But as the principles of X levels, if we rewind this, so if we've now got our higher time frame soup, right, and we're inside of our breaker block, this is where we can start hunting our entries, right? So once you break through, you've now got your breaker block. Doesn't even get back into a unicorn here on the 15-second chart. But once you've broken the 1, now you're going to be seeking the 5-minute. liquidity. And then beyond that, you're going to be looking at the 15 as you work back through to take out the 15-minute high. All right, as price expands back out through the dealing ranges en route to target, right? So if you're trading the 1 minute, you've now got your breaker structure on the 1, right? So whether you traded that as your mitigation block, right, or breaker block, this would be your mit, that would be your breaker to trade price higher. All right, break on the 1. I always pay myself inside of a 5 because that's where you can get offset accumulation for higher prices, for continuation, to drive price up to the objective. All right, first target 1x. All right, so if you just play this forward, that's where you get your offset accumulation, right? So I always pay myself inside of a 5 minute, always. Always, 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 it's where you get offset. So if you're looking to trade continuation from here, you could look for a breakable 1 back into a 5 minute discount for a long, right? Discretionary model. Okay, so this little 1 minute, which got broken, look for a 5 minute discount, trade long again. All right. That would have been your terminus, or you would have trimmed at that position. All right, right inside of there above the 5 minute high. Okay, so that's your bog standard discretionary model using X levels. All right, but meanwhile, we're just trading inside of a wider model, right? We're just trading inside of a wider model, which is the mechanical TS. Right, which is going to take us all the way up to 2. So these are the sorts of trades where you can absolutely print. You know, you can get your entire weekly objectives fulfilled. You just got to stay patient and wait for them to set up, right? So this is now coming into London. So this is now London. So right there at 1x would be where you'd have 95% of your position off. Anything from here, you're just running up to 2 inside the mechanical TS. By the way, if we just rewind this for a second. So inside of Red Pill Uni, right, we often talk about the premium and discounts of the London dealing range. So if you are bullish and your low has fulfilled its objective during Asia, and there's 2 things we're looking for, right? It's either 15-minute order block underneath engineered liquidity, or we're going to look for our breaker block. Well, in this instance, we got our breaker block, right, inside the RTH gap. So if you're not anticipating price to come back and prices fulfill its objective, also we've left this higher time frame breaker block inside this hourly order block. All right, it's now an order block. We can look for a pullback into London discount. And so all we're going to do is look at our London dealing range, and we're going to have context for why that is not going to be broken, that London low. Right, that's all you're asking yourself. Do I have context for why that low is not going to be broken? All right. If you look at this from this high and this BISI, right, you've now got your unicorn. Okay, you've now got your unicorn entry right on there. Right, that BISI, that breaker block. So you're not anticipating this low to be violated. So if I'm ever trading off a London discount for continuation, I have to know, why is my London low going to hold? Obviously the opposite is true. Is if I'm bearish, why is my London high going to hold? But in this instance, I'm bullish for the reasons I've just mentioned. So I am looking for, why is my London low going to hold? Why? And if it is going to hold, I've got confidence for it. In this example I've just shown is the unicorn. Well, this is where I can look for price to pull back into a London discount to go long. So again, utilizing the principles of X levels with premium discount. This is coming back down to a discount of the London dealing range right in here. So that's where you'd go long, right? You stop below this low because you're not anticipating that low to be taken out. So if you were trading London, you're asleep during Asia, which is what I was on this particular day, well, you've now got your entry to trade price higher, right? Ultimately, to come and take out that 15-minute high that was up here and get up to 1x, right? That's where you'd have 95% of your positions off, and now just holding to get to your deep extension, which is 2x, right? Okay, so that is a bog standard entry trading at a London discount with confluence for why your London low is going to hold. Like, honestly, London is the easiest session to trade as a trader, because there's only a certain few things you're looking for. Bingo, right? For me, terminate. Like, that is the model complete. That is a mechanical TS complete, right? So if you were trading during Asia and you managed to capture your breaker block on the low, 260 points, 250 points I should say. Are you complaining? Would you be complaining about that if you just that once a week? Or if you took this entry from this, the pullback into the London discount, 170 points? Would that be satisfactory for a week if you could just nail that once? Right? Can you wait for that setup? Can you wait for a mechanical TS and then can you just trade accordingly? And can you have the higher time frame bias to support and then you just let the thing breathe? All right? Just let the thing breathe. So, if we are ranging and London hasn't fulfilled our objective, all right? Okay, if London has not fulfilled the objective, what could be setting up during New York? Anybody? What could be setting up during New York if London is not fulfilled the objective? Exactly. Exactly that. Okay, so as soon as you've got 2 4x, we now know that that is a deep extension on our MACTS. So right inside of here is where you're going to start hunting for your entries. Right in there. Okay, so right here, this is a horrible little wick that you got there. So look. Delete this for a second. So right inside of here at 4x, again, there's other things which I see inside of red pill which you'd be looking for at this point in time, but this was your 1 minute low. So once that breaks, you've now got a change in the state. Right, it's the same principle. If you had your trigger up on that high, you could put your stop essentially just above that high. That's a horrible little wick. But again, always 2 opportunities at a trade idea, right? So if I was in this and I was looking to short this, and you've got your break on the 1, you could wait for price to get down into a 5-minute discount. And then you're just going to do your discretionary model. So you're going to wait for price to come back into a 5-minute premium as long as you've got a buck stop above your 5-minute, and you're going to short the 5-minute premium. Right? What I would then do is measure out my extensions. I'll be doing the same thing. Right? In this instance, with it being a New York AM session reversal, what's our objective with the New York AM session reversal? If you're trading a New York AM session reversal, which is the only thing you'd be interested in trading here. All right, if London hasn't fulfilled the objective and it goes and fulfills it, all right, what would you be looking for? What day was this? Wednesday, 23rd. %, yeah. Is your Forex. So yeah, if I'm ever trading a New York AM session reversal, I'm only interested in taking price back down to 50% of the range. So that's the daily range. So from the Asia low to the high in New York. So that becomes your objective. All right, so right in there is where you terminate your trade. And just be content, move to the sidelines. So if you missed the morning bullish run, you can trade the sweep. Right, meanwhile, this low inside the breaker block is your buck stop. This is where you do not want to see price to go through for bullish price. Get rid of that. Just messes around for the rest of the day, basically. So again, the following day, you've now come into back into your breaker block, right? Okay, so what could you have traded up here on this particular day? Let's have a look. Okay, so the same principle. This is a 15-to-1 model, right? I think we traded this on this particular day. So the sweep, your 1 minute SIBI. On your high, right? You're going to target the 5 minute low, which is all the way down there. All right? But again, if you are bearish and you're anticipating lower prices, you're going to short the London discount, London premium in this example. All right? So essentially measure the high to the low. What is your beef? Simply wait for price to get up into a premium and then frame your entries. Okay, so anywhere in here is where you'd be looking to go short if you were looking for continuation. So essentially you're now looking for a sell day. Okay, so exactly the same principle that we were doing on the low, right? With price going outside of a discount of the London dealing range. This is going short outside of a London premium, the London dealing range, anticipating continuation. So if I'm ever trading this, I always pay myself underneath the liquidity pool. So underneath, if I'm trading short out of a London premium, I'm basically targeting the low of London if I'm bearish, because essentially what I'm saying is that the London low has not fulfilled the objective for higher prices. All right, so that is always my first objective. All right, that low. So if I'm trading a London premium, I'm targeting the London low. All right, that's my first objective. But I need to know that that London low has not fulfilled all the objectives, right? So exactly the same as this day. If I'm trading out of a London discount, I'm targeting the London high. All right, on the basis that that hasn't filled the objective. All right, it's exactly the same. Okay, so what time can set low of day? In terms of time frames, what time can set low of day? If I'm ever going to hold a trade for the entire day, what time would I be looking to take my entry? No. 10:30, no, that's like a retracement macro. 10:30 macro. That's all the 10:30 macro is for, is to sweep liquidity for those holding the bag at the open. That's like, if you're ever going to trade the 10:30 macro, all you're doing is running liquidity. That is it. And so if there's already been a sweep before 10:30, your probabilities for your 10:30 macro reduce considerably. So basically, if you're going to trade the 10:30 macro, you want to see a complete sell-off from the open with no pullback. And you trade 10:30 to go run the AM liquidity. No. So if you're looking at a low of day or higher day, it often forms around 6:30. So again, we're now in the morning. So we're now back down here, inside of our breaker block, inside of our RTH gap, right? Anticipating high prices for us to drive up to 20,000 in line with our weekly objectives, right? Thursday continuation in terms of weekly profiles. So again, inside of here is now where you're looking for your base rule principles. Okay, so you'll know what they are inside of red pill on this low, but we're now back inside this breaker block, right? ES reaches its breaker block. Okay, so now the same principles, always the same principles. You got your turtle soup, everything forms after a turtle soup. All right, so if we just rewind this back to here. So this is our 1 minute dealing range. All right. From this high to this low. Why is that our 1 minute dealing range? Because it can be confusing. Why is that our 1 minute dealing range? All right, so that high, that put in that low was our 1 minute dealing range. When this high that should be the 1 minute dealing range there. Sorry, take this, rewind. So this high to this low, right? When this high, put in this high, 1 minute dealing range. So we're looking for this to break, but if you go down to a lower time frame, you'll be looking for a lower time frame if you're going to trade before the 1 minute breaks, right? So you can trade the 15-second, you can do exactly the same principle. All right. So there'd be your 15 second, 15 second, bearish 15 second, still your 15 second. That's now your 15 second. So if you've now got your 15 seconds, you've now got your breaker structure, and you've now got your trigger, you can just flip your dealing range over. So the principles of X levels, so that high to that low was your dealing range. Once this gets put in, that closes above that swing high, that becomes your dealing range. All right, so all you're going to wait for is price to come back down into a discount after a break of structure on the 15 second to then frame your entry. Right? Or you can just set your limit right there, right inside of the discount of the 15 second. Now, after your 15 second, you're now looking for your 1 minute to break. Well, as we know, 1 minute's all the way up here. So that's what you'd come and target, all right? So we hop to our 1 minute. And this whole run is beyond that to your 5 minute. As we know, 5 minutes up here. So that is always where I pay myself. I always pay myself inside of a 5 minutes. That's where you can get offset accumulation. Every single time I pay myself there. Right in here is where I pay myself. Every single time. No questions asked. So from that high to that low, inefficiently delivered. So right in there is where I'd be trimming. Okay, so if I'm trading out of a 1 minute discount, or in this instance a 15 second discount, because I have an execution pane on the right hand side, and I'm anticipating bullish expansion, I'm always going to pay myself inside 5 minute premium. There's no ifs, no buts, or maybes. It's how I trade. I scale out of my positions, because what will often happen is you'll get into your 5 minute premium. Okay, so this is our 5 minute. From this high to this low is our 5 minute dealing range. It will come up into your 5 minute premium, at which point it will move back down to offset accumulate. This is where you can get your secondary entries. So whether you're going to take your breaker block, your mitigation, whatever it is, inverted fair value gaps, they all come out usually after a form of offset. So we press play. And this is, but honestly, it doesn't have to come back, but I do it because eight times out of 10, it will come back. Okay, as I've just shown on the previous days. Inside of here is a breaker block on a higher time frame. It's also an exicorn for those inside red pill. Okay, so I actually remember this day because I didn't trade any of this on the low. However, I got to my charts around about here. I think I took a small trade in here, a really light size, but this is where I went in heavy. So again, this is another one of my models, right? So if we're now anticipating bullish expansion, we've come all the way back down into our breaker block. We can do exactly the same principle. Just going to measure out our extensions. Okay. So I'm always looking at 4. And then I'm always asking myself, okay, so what context do I have for price to take out these highs, right? What context do I have for that? Well, as I mentioned, at 20,000 is the dole. But up here we had a weak high. So this high to this high was inefficiently delivered. And we also had a divergence with ES up on this high. Also relative equal highs on the London high, right? Also 4X sat just above that weak high. So if we're now looking at a market maker buy model, which is what was on this day, okay, so sell side the curve, SMR, buy side the curve, I'm always going to look for a sweep of liquidity at 50% of the sell side of the curve. And then I'm going to be looking at my first 5 minute BISI on the buy side, underneath that underneath that liquidity sweep. So this first 5 minute BISI becomes my entry. And I'm going to go and target, first of all, this high. That's where I trim, right above that high. Okay, so my entry goes right in here. I always go off mean threshold. I target my objectives, but my stop goes just below that 5 minute candle, which creates the 5 minute BISI. All right, include the volume imbalance. So I pay myself inside of here, just above that high. All right, let's get rid of this. I pay myself just above that high, and I hold runners. Price will often come back to this at a later point, by the way. So right in there's the exact entry. We took this inside red pill, actually. It was my exact entry right there. Paid, hold runners. Bingo, right? Because it's a secondary entry trade. That is where I'd terminate. I didn't want to hold runners. So in this instance, price goes and absolutely humdings and rips like 1,000 points on this day or something. But yeah, it's what it is. And this is what I'm always mindful of, that price can come back and revisit these lows. 8 out of 10 times it's going to come back and revisit this low on that day. So these then become a dole at a later point in the day. However, on this day it just absolutely rips. So again, the final thing is, if I'm looking at this, I'm going, okay, well, you know, I'm anticipating the higher prices. How can I get in on this? Well, first thing I'm going to ask myself is, okay, so what happened pre-830 on the sweep? Okay, so what I'm always looking at a valid sweep pre-830, right? And then that low to the high going into the open becomes the buck stop. So again, I'll be asking myself, do we have new triggers in here? What's in there that can support price for higher prices? All right. You've got balanced price range here. It's nothing that I would have personally taken. So I wouldn't have chased a long out of here. So the only thing we can do is look for a break of a 1 back into a 5-minute discount. That is it. That is the last thing you can do on a buy day, right? So if you miss the breaker block, you missed the 830 sweep entry, you missed the pullback going into the range between this high and this low, going into the open for continuation, utilizing X levels. The only other thing you can do is a break on a 1 back into a 5-minute discount to go long. That is it. So if I was trading in here, right? This is my 5-minute low. This is my 1-minute high. All I can do is look for it to come back into a 5-minute discount and look to frame an entry inside the discount on the 5-minute. So inside of here is where I'd be hunting my PDRAs for a long. If it doesn't do that, there is no entry for me. All right, I just will not chase it. So right in here would have been a prime example. Okay, so sweeping out this 1 into your 5-minute discount for continuation. That was your last opportunity right in here to go long. Just using the principles of X levels inside this order block. Right, and then the same principles apply. So as price drives higher, the only thing you can do on a buy day is not short it. Right, the only thing you can do is wait for it to come back into a 5-minute discount. So if you see price ripping like this, there is nothing you can do. Nothing. You're either in here and holding runners, or you missed the trade. So all the way through this, I'm always asking myself, okay, so where's my 5-minute dealing range? Well, my 5 minutes all the way down here. So if I was looking to get back in this again, I'll be waiting for this to break, back into a discount, 5-minute discount for continuation. I never short a buy day, and I never bounce a sell day, ever. The only time I'll look at it is 10:30, but I have to have strong confidence for it. Okay, so still no break. There's absolutely nothing I can do in here. Nothing. Still nothing. I don't short a sell day. Still nothing. Okay, so my 5-minute low is now down in here, right? So I now know if price breaks, I can look at a discount on the 5 minutes, go long. It's as simple as that. And then I dial in my PDRAs inside that discount and align it. Okay, and if it stacks up, it does. provides an opportunity for a trade, right? So again, we've got 3 OBs, we've got our first BISI. So right in here is where I could look to frame an entry if price came back into a 5-minute discount. Okay, right in there, bingo, right? I'm not looking to short a sell day. I'm only looking to long a buy day. I don't remember any of this. I'm doing this live with you, just in fast forward. This is exactly what I'd be looking for if I was trading real time, right? All right, just wait for a break on a 1, back into a 5-minute discount, go long. Don't short it. It's much better being proved wrong, for example, it carves through the 5-minute low, than it is to continuously try and short a buy day. Flip that for a sell then. All right, so if I press play, and again, if I'm trading on a buy day and I'm taking a break on a 1 back into a 5-minute discount using X levels, my first objective is to trim above the 5-minute high, because essentially what you're trading is discretionary, right? So my objective becomes right there. Okay, and then if you wanted to hold objectives, you're going to start asking yourself, okay, so where do we now sit on the higher time frame? Well, we're now back inside of a deep premium. So up inside of here, this was a H1 to M5 model, right? So if I was looking at this, H1 to M5, I'm going to look at terminating at the lower quad. That's where I'd terminate. I wouldn't wait for 50%. All right, so right in there. All right, so if I entered on that, I'll be looking for it to go and fulfill an objective. I'm looking for continuation. All right, I'm not looking for it to pull back. All right, I just want it to keep going. It's a buy day. All right, that's what I'm trading. That's why I've entered there. Boom, terminate. Done. All right, so if you entered on that BISI into there, 120 points, right? So if you were considering a short, what schematic could be in play if you are trading a buy day and you've had no major retracement and you're not at 10:30? By the way, that pullback break on a 1 into a 5-minute discount took place at 10:30. All right, no major sweep from the open into 10:30. That is what the 10:30 macro is for. I hope you're taking notes, guys, because this is just source. All right, if you're going to trade 10:30 macro, you don't want any sweep. That's what it's for. Come and sweep out liquidity, those holding the bag, those who are just trailing their stop, right? So for anyone who gambled and they're just going, oh, this swing low looks right, let's just keep piling it up, let's keep moving it up, all right? Let's just keep chasing our runner. All right, that's what it's for. It comes takes them out. Yeah, so 11:30 would be a London close reversal. Okay, so you're now walking into the threshold of a London close reversal. So 11:30 macro. So again, time is key. So we now know we're inside an H1 to M5 model. But if you're trading an H1 to M5 model, what are you going to target? Anybody? 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 If you're trading an H1 to M5 model, what are you going to go and target? 15-minute low. Yeah, that's your long-term objective AP. But where are you going to take lion's share off? Where are you going to take lion's share off? 15 discount, exactly. So if you're going to trade the H1 to M5 model, right? Say you're entering aggressively on the lower quad, where does your stop have to go? Not fair value, no, discount. Where's your stop going? Not 5-minute low, no. Exactly. So if you're trading this, where's your high gotta go? So these are the sorts of questions you've got to ask yourself, right? Is it worth the trade? Is it worth it? You know I always harp on about 3 to 1 Rs, right? But your stop has to go above that high if you're trading an H1 to M5 model. So if you've built all the cushion on your day and you've got room to play with, that would essentially be your trade, right? Which gives you a 2 to 1 R, right? So if I'm ever trading an H1 to M5 short, in this example I've just shown you, that I'm always looking to trade bullish price, I would have taken the discretionary long, so the break on the 1.5 discount for a long in a buy day. All I'm looking to do is short the lower quad if I'm going to trade the H1 to M5. If the stop is mahusive, like it is in this instance, you parlay in at 50%. And so you take half risk on the lower quad, and then you go full position, either at a fill or at 50%. I usually go at 50%. Okay, you're going to target, so you're going to take off inside of a discount, 15-minute discount, so using the X level indicator, so from this low to this high, and you're going to hold runners to take the liquidity below the low. That is your 15 to 1 model. Sorry, H1 to M5 model. So if we just hop to the 1 minute. So in here, you're sitting pretty, right? Boom. Okay, so if I've taken that model and I'm short on that, I'm paying myself right here. Right in here, I'm paying myself, and you guys will know again why 3OBs middle city. All right, there's your PD array inside of a discount on the 15. Right, this is where price can pull back. So if it's going to fail, and remind yourself that you're inside of a buy day. If an H1 to M5 is going to fail, it's going to fail inside of the M15 discount. So you always pay yourself where the model can fail. That's why I average around 70% a year, because I pay myself in where the models can fail. Right? So you pay yourself where it can fail, which is the discount on the 15-minute. Press play. Buy, and also your stop doesn't move, by the way, on H1 to M5. Okay. Oh Jesus! What's happened? Okay. What am I doing? Okay, so right up in here, it's gone right now back up into essentially 50% of that civvy, right? You'd still be in this, but you've already paid yourself. There you go. Okay, so in this instance, on that H1 to M5, chances are break-even trade or a tiny green at best. All right. So with an H1 to M5, if price breaks through an H1 to M5, what does it become? does it become? Right, exactly. So if you're sat here and you're going, well, I want to short now. There's absolutely no way I'd be shorting that. There's absolutely no hope in hell. Like this is where my day would be done, right? So if I took those longs, which I was talking about today with you, and that was my last trade, this little break-even trade, I'll just move to the sidelines. That'd be it, right? But this is the principle. You don't want to be shorting a buy day, because this is what happens. All right, it just keeps on moving on you. But yeah, again, if you break through an H1 to M5, this now becomes support. So again, same principle. You can now look at the upper 50% to now act as support as price moves higher. Okay, so again, same principle, paying yourself above the liquidity. And if you wanted to hold runners, you'd just be holding runners. Okay, so if we're going to now look at, okay, so what could price be doing? We're going to go all the way back to our original MACD, right? And we're going to hop onto the 5. Our original manipulation. I'm going to ask yourself, where could this pappy be going, right? If we're now in these realms, there is nothing for me to do apart from just let runners go, because you're beyond any extension. All right, you're trading into new realms. All right, you just let the thing breathe. Would I be looking to short this? Hell no. It's where you just want a runner and just have a runner to go. Onto the one. You see how now it's turned into support, right? Next day, same principle. Utilizing this as support, looking for higher prices. Higher time frame sweep liquidity. Lower time frame breaker block. This is what we traded inside of red pill for higher prices, right? And just off she goes. Literally, I traded this entire day. I traded this short. I was in on that very high. And just let this thing go for the rest of the day. I think I terminated there. So if we look at this, if we rewind this, we go to here. So this was S&D profile. Okay. So this is the last thing I'm going to talk through today. I'm going to dip off, leave you guys to the rest of the weekend. So S&D profile, so this 15-minute low, 15-minute high, we're going to look at as price is essentially consolidating. We're going to be looking at our highest 1-minute SIBI inside of a premium of the 15 minute, and then we're going to be looking to see if there are BISIs left open on the premium side. In this instance, this is the discount, this is the premium. Okay, so a 1 minute in a premium and a discount. And we're going to look to see if we have a model to trade in line with that. So this is actually a 15 to 1 model. So it's a 15-minute sweep, and then your 1 minute SIBI inside of a deep premium. So all the way up at 21 and 12%, which is deep premium. All right, so that's exactly why I went short inside of this. So if we're trading a 15 to 1 model, what becomes our doll? To rewind this a little bit. So if we're trading a 15 to 1, where's our doll? M5 low, where we're going to pay ourselves. Where are we going to pay ourselves? Yes, sir. So we're going to pay ourselves inside of discount. We're going to hold runners for the low. Okay, and we're inside of S&D profile, so this BISI would become our draw. That's exactly what we traded. I actually held runners for... Go and read the daily plans. Exactly what we were looking for. So, get rid of that for now. So if you're going to short this... Stop goes above the high. If you're trading S&D profile, if you just want to keep it low key, just target the 5 minute low. So pay yourself inside of a discount on the 5. So you're going to pick your P to raise your inefficiencies inside of a discount is where you're going to be hunting for your trim. You're going to hold runs for the 5 minute low. For me, this trade, I took it all the way back down to the H175. All the way down into it. Okay. So if we press play, so this is a turtle soup entry. All right, so there's your sweep of liquidity into your 1 minute SIBI. There's your TS entry. All your secondary entries come off that. So there's your inverted fair value gap. This would now be your breaker block. So right in here, pay yourself, and it blows through and takes out the 5 minute low. So if you're hyper aggressive and you know you're in S&D profile, no news, that BISI becomes an area for a long. Okay, now, if you are anticipating price to pull back, and there's wider context in terms of X levels, we're in a premium across the board, right? We're a premium on the daily, the weekly, the hourly, and the 15 minute. So you're anticipating a deeper pullback into a discount to go long, right? So you want to be inside of some form of high time frame discount, whether that's 15 or above. We were in a premium across the board. So if we were looking for price to get back down into a discount, using the purely principles of schematics alone, that we've been speaking about all morning. What are we going to do? What could we look for to get back in and sync with this? So if I'm looking to essentially trade a sell day, what's going through my mind? Exactly. Okay, so all I'm going to be asking myself is, where is London Premium? So when I'm now managing my trade, because I was in this trade from this high, all I'm asking myself is, where's London Premium? Because essentially that's where I can parlay in, or that's where above those highs is where I'm going to be trailing my stop if I've got all my triggers and my confluence, right? So I'm not anticipating price to violate this high. It's filled the SIBI in the 15 to 1. I'm anticipating a deeper continuation, not anticipating the London highs to go. All I can do is look for a London discount. So what we're going to do is just wait for price to get into a London discount, or a London Premium. So at any stage here, has it got into a London Premium? No. It's got into fair value. You may have shorted that. You may have shorted that. But you've got to allow it to go into a discount, into a premium. So right here, you've got essentially a unicorn. So this SIBI. Right, this breaker blocks I've just mentioned with this SIBI is now a unicorn. Okay, so we've come down to our SIBI, sorry, our BISI inside of our search and destroy profile. 15-minute high, 15-minute low, low and high. Just rebalancing the inefficiencies within inside of that range as we accumulate. Okay, so now I'm looking for continuation to take out the low. So if you're trading an S&D profile, essentially you're going to be shorting a premium. You're going to pay yourself inside of a discount, and you're going to hold runners to take out the low. Okay, what you do not do inside of S&D profile is trade inside of here. It's like a no-go zone. Never trade in there. You're essentially liquidity. Never trade inside of the 262s, which is actually 62 and 38. But so you're going to enter shorts inside of a premium, pay yourself inside of a discount, hold runners to take out your loan to your deeper objective. So I'm entered up here, so I'm looking to run out the 15-minute low. Okay, but overlay it with the principle of a schematic. I'm just looking to go short inside of a London premium. All right, so if we let's get rid of this for a minute. Where's my thingy? So here, all I'm now asking myself is, okay, do I have an entry inside of a premium that I can go short of? All right, do I have a model that I can go short off inside of a premium of the London dealing range? Do I have a PD array to support it? Right, well, I know I'm inside of S&D profile, and I know I want to be shorting a premium. Okay, so there's our breaker block. There's our SIBI. There's our unicorn. Right. Okay, so this is now where I'm managing my trade. Bingo. That's your limit sell. Again, pay yourself inside of a discount, hold runners, take out the low. So again, final element, we can go back to our minute. We can seek our objectives. Yeet. All right, that becomes your last objective. If you're trading S&D profile, you're picking a side. If you're bullish in S&D profile, you're going to be looking for price to go and run out the 15-minute high. If you're bearish with S&D profile, you're going to look for it to go and run out the low. It's always on the 15-minute. It's an example where you can, if you're aggressively short, bingo, done. Back into our old H1 to M5, which is support. coming into data here. Okay, so if we go back to here, again, same principle, higher time frame sweep sets up a high probability lower time frame breaker block. So this is where I went. I was actually in here on this day and parlayed in here. Okay, because I'm bullish now on the day, because I'm looking for 20,000. We've come back down to where we're looking to go long, which was inside of a discount at that point in time. So again, we can now just go out the opposite. This becomes my objective. So again, we're now going back through the dealing ranges, right? So this is our 1 minute dealing range. We're going to be asking ourselves, where's the 5? Well, the 5 and the 15 is the same, right? The 5 and the 15 is the same. So again, pay yourself inside of a premium. Hold runners, take out the high. Bingo. Pay yourself. Anything from here on out is just runners. And so this is on this day, I just said, let's let your runners go for the rest of the day. Alright, which I think a few of you did on Friday. Alright, just let your runners go. Right, there's no reason to hold them. Or collapse them. You're bullish on the day looking for 20,000. You got this breaker block to support. So it's going premium discount, premium discount. You're looking for this 15 to go. Just let it go. Got nothing else to do. That pretty much wraps up the week. That's where we are now. So I'm anticipating next week for us to go and start up to this 20,000. So just have to see where we gap up tomorrow. Or gap down, of course. But yeah, I'll obviously be doing the daily plans tomorrow, so we'll see where we're at. Alright guys, so if anyone got any questions, otherwise I'm going to call it here. Anybody got any questions? Ah, you're welcome. No problem. I might do if people find value in it. I do it for myself anyway, so it's like, you know, there's no skin off my back. If people find value in it. Did you find it helpful? Was it helpful? Was it useful? Like it's these little things, right? You know, if you do these on your own, that builds your intuition when you're in the markets. You wonder how I do it all the time when it's doing this. Cool, good stuff. All right, guys. Well, enjoy the rest of your Sundays. I'm gonna go and enjoy mine, and I'll catch you all on Monday. All right, tomorrow. So take it easy, guys. Enjoy your evenings. Ah, bosh.